You're asking me?
Well, all right, Jet, since Jim's muted, you.
Oh, I'm sorry. I misheard.
No, no.
We
Are you
better be
working nine to
working.
five?
We better be working more than 9 to 5 these
I was
days.
about to say. All right, let's roll. We got a lot to cover today. All right. So I want to start with this crazy article. So median U.S. home price is projected to hit 1 million by the year 2050, right as the millennials retire. I'm just going to stop. What do you think?
Uh, sure. There's so many pieces to like right into that, right? I mean, right, what was our median price in uh I mean, we could look at 1980 in the 90s.
Well,
Uh
here it's
and
saying it was 1990 or is 90,000 in 1990.
yeah, I don't know. I think it'd probably take a 2020 to happen again, which if that happens again without, we had a great recession on the front end of that happening. That kind of caught us up to where I think we should have been. I don't know.
I don't know.
I
I
don't know
feel like
about
I'm in jeopardy
anything.
of being my parents. Like, oh, when I bought a house, it was $26,000. Blah blah blah. But the reality is, average increase in home price annually over 50 years has been 4%.
Yeah.
So at 4% a year, it's like 17 years for your house to double if it's at 4%. However, over the last 5 years, most people's houses doubled because we've had crazy appreciation.
Yeah.
But reality of this is, I think it's probably accurate. It'll hit $1 million in the next 24 years.
The median though,
The median.
man,
Jim, you got to
maybe
get your
I
head
just
wrapped around this. You've got
I
to get
can't.
your head wrapped around this.
There's a lot of things I can wrap my head around. I was a big crypto guy. But man, Brett, that's a lot for just the median. Not saying that it can't happen, but the biggest thing that I thought about whenever I read this was Gary said, buy real estate and wait.
Yep.
And that's exactly what this is saying is buy real estate and wait. And it talked a lot about, well, once the millennials get to retirement at this age, this is what they're also going to be facing. Like it's just this constant uphill battle for them. It's no, your strategy just needs to be different. Buy real estate and wait.
All right. I'm going to fact check us real fast. If I own a home
I had to do
today,
this on a couple different articles just to I,
that's worth 450K and it appreciates 4% a year, what will that home be worth in 2050? Come on, AI, don't let me down.
man,
Oh, it's pro thinking.
bro, I think it's going to take a little bit extra.
Anyway, I'll come back to it, but I actually think it's probably all right. It is a simple math equation. Come on.
Oh, there was the equation right there,
I
Brett. I don't
know.
know why you didn't just figure that out earlier.
Listen, uh, 1.15 in 2050 if
Jeez.
it appreciates what 4% a year. Boom. Thank you, AI. Moving on. So here's the reality. If you have people that think the world's going to fall apart, there's a housing bubble, they shouldn't buy real estate, here's your sign, as the old comedian would say. A $450,000 house today in 24 years will be worth $1 million. And that median price house in 2050 will probably be $1 million.
Brett, with what you just said right there, that the everything's going to like fade away and or fall apart, that reminded me so much of everything we heard in 2010 when we were going through the Great Recession, right? And if
Sure.
you bought back then, oh my gosh, I was telling a couple people, have a couple clients that, you know, bought a lot of homes back then, and they were buying them for 80,000, 85, right under 100. Those homes right now are making them a lot of money. It's these are the times that you should absolutely be buying real estate.
Yep. So all this coming out in Lawrence Yun, chief economist, NAR. He's also predicting flat mortgage rates through the rest of the year. He's predicting 6.5. Newsflash, we're at 6.5. Um, he's not, I'm still predicting that we're going to creep down closer to six, not at six, but I think you might see some 6.2s. We'll see. Moving on. Let's hit the numbers. Rockwall County, active status changes 233. We've been up over the last 2 weeks. Um, it's holding. I wouldn't say it's going up. I wouldn't say it's going down. You're seeing some weeks back here with 240, 267. There's some lower weeks. This, I think, was Memorial Day weekend. But 2 weeks ago it was only 211, and we're at 233. That's actually pretty positive. I don't think you're going to see that in all the counties. We had 29 people say yes to the house in the last 7 days. That's a little bit softer than what we've been seeing. And one of my questions that I want to ask everybody, and that I kind of believe right now, is the market's hit a little bit of a lull, or I guess I would use the language a softening over the last couple of weeks. I don't believe it's permanent. I believe it's temporary. And I think it has something to do with mortgage rates. I think it has something to do with the geopolitical events. But if I'm just looking at this, it seems to be a little bit softer than what we were seeing the previous 60 days. Um, and we're sitting at 41 pending. That's not that great of a number comparatively to like 60, 77, 67. It feels a little softer, and I think it's a little temporary right now. However, we closed 57 properties. Now, I have to believe this is part of the end of the month closings because, we have what, 2 days this week before the end of the month, maybe
Yeah.
3 days. So some of those end of the month closings were last week. Um, and 57 is a good number. Reminder though, those were contracts written 30 days ago. So we may have a little softer closing month in the month of July. We'll see, depending on what these numbers look like. So that's Rockwall. If I hit Dallas County, you're
Brett, if you
seeing
refresh your page really quickly, the coming soons will be there. Sorry about that. There we go.
all right, Dallas County. Um, the 1610 active status changes, which is up from last week. So some of the other markets I track, Jim, the listings have really slowed down. I'm not seeing the slowdown in Dallas Fort Worth. I feel like the listings are holding. I mean, we had 1610 this week. Back in May, we had 1609. There's quite a few weeks here we had less than 1610. So I actually think that listing inventory is doing better in Dallas than other parts of the country. Um, there's 329 that went active option, right? You see this slowdown. So there was 366, 336, 346, 355, and then the last 2 weeks, 339, 329. It's a little bit softer, not fall off a cliff. It's just a little softer. Pendings are at 399. We were well into the 400s previously in Dallas County. So just a little softer, not off a cliff, just a little softer. 424 on the closings, which is a healthy number end of month. If I go back 30 days, we were at 429. We were 424 here. So we're kind of holding our own on closings. But remember, 30 days ago is when those contracts were written. If I hit Collin County, Collin County 1694 active listing status, increase from the week before, a little bit up from 2 weeks ago. Same story, like listing inventory is holding pretty good in Dallas Fort Worth. I think that's a big deal.
Yeah.
Like normally it slows down a little bit towards the end of the summer because everybody put their house on the market in April, May, June. Um, these are late to the summer market listings coming on, and there's still a healthy number coming on. I think that's positive. 214 is same story. You had 219 the week before, 219 the week before that, 221 the week before that. These are not the same numbers as 244, 255, 251, 259, 270. It's a little softer going under contract. Pendings at 366 is good. 354, 350, 346. It's just not the same number as 398, 389, 381, 438 or 439. It's just a little softer. Do you see it? But we're still hitting good closing numbers. 399. I know in Rockwall we've had 2 big months. May and June were big closing months in Rockwall. I just don't know we're going to have the same numbers come July. I think we're going to have a good July. It's just going to be a little bit softer, is kind of my thought. What do you think?
Yeah. I'm wondering if kind of the opposite there. I'm wondering if we don't have a pretty good surge in July.
If we do, though, it'll close in August, is what I'm saying.
Right. Oh
Yeah.
yeah. I think I think we're kind of set up here for maybe a good pending month coming into July. It's that time of the year that you and I have talked about for a couple weeks here, Brett, of what does the back to school look like once we get into September, October, November, and kind of going forward is what does that market look like? And, I think we can take advantage of a good market, not just the hottest summer market we've ever seen, but I think we can take advantage of a good market. But what are we setting ourselves up for that late third going in the fourth quarter?
Yeah. And I always remind everybody, top producers understand the market and then go create their own reality. So
Yeah.
you can win in any market. And we've got a good market. I wouldn't say it's on fire, but we've got a good real estate and climate right now. So if you're on it, you can win. You can win big right now. And I think that's important to say. Running out to the lake real quick, Henderson County, 135 active listings says that's a big jump of listings coming to market out in Henderson County. 17 went option pending, which is a really big number for them. And then they're sitting with 18 pending, which is consistent. So it's very stable out there. 22 closings the last 7 days. I mean, it's a little insulated out at Cedar Creek Lake.
Yeah.
All right. Is the housing market turning a corner? What the numbers say? There's 3 big numbers here you need to get your head wrapped around. First one's $78. That is the current price of a barrel of oil. Now, if you tuned in or been through any of our stats presentations, Jim, this price of oil is directly impacting mortgage rates. And we've shown how the impact of a price barrel of oil impacts mortgage rate. 78 is a good number for a price of oil. So all things considered, you probably read the news over the weekend, like I read the news over the weekend. $78, in spite of everything going on, is really good. And I'll take that all day long. We broke $108 back in May per barrel of oil. And when I did my industry update in April, that was big part of our talking point was this price of a barrel of oil was really going to dictate our future. And the fact that it's come down to $78 is really good.
Yeah.
The second number, you got to get your head wrapped around. And Jim, I'm going to laugh. It's 4.2%, which is where inflation is right now in the country. We thought we were done talking about inflation. Like that was the storyline for 2 years.
I buried
And
it.
so this is putting immense pressure on the federal government to do we do anything or not? Could the Fed raise the Fed reserve rate? They absolutely could. Um, I actually think they're going to wait it out personally. I think they're going to wait it out and see what this resolve of the Iran conflict, if inflation just comes down naturally. But I've read opposing articles that said, "Heck no, they're going to raise the rate." You know, it's all in the politician and the Federal Reserve's hands. But I will tell you, 4.2 is high, and there's going to be severe motivation to get that down. And then the
But don't we
third,
feel like
go
it's
ahead.
just because of what we're running into right now? I mean, just you and I here talking.
That's what I believe, but I'm not making the
I
policies.
know. Gosh, I wish we were making the policies, Brett. So if let's just say worst case scenario, because I'm sure other people are thinking about this, is golly, what happens if they do raise that Fed rate? What do you think? I've seen that Fed rate go up a little bit and nothing really happened, and we've seen it just kind of skyrocket. What's your feeling on that?
My fear is if there's a news headline on CNN or Fox News or MSNBC or whatever news article they're reading that says the Fed raises the rate, the uneducated consumer believes that means the mortgage rate went up.
Yeah.
And I think it'll put a hit temporarily on consumer confidence, and that's not good for us. But I don't know that it necessarily raises mortgage rates.
So then if we've got agents on this call right now, what should they have in their holster ready to do if something like that were to happen?
You know, they've got to talk through it and talk about the perspective of mortgage rates and
Hmm.
talk about, hey, 6.5 is a pretty gone good mortgage rate. And then show the comparison of that and then continue the dialogue around there is a day in the future where mortgage rates will be 6% again, and we'll just refi you, but don't wait
Yeah.
because prices are still going up in our market. And it's that
Yeah.
same dialogue we've been saying. Um, but yet, let's take it day by day. I'm not sure they're going to raise that rate personally.
Yeah.
Luke would argue he's convinced they're going to raise the rate. But we'll see, right? And then the third number, Jim, is 5%. Here's the crazy part in this whole dialogue. And then I've got some more charts to show you. In the month of May, because we haven't finished June yet, pending home sales were 5% greater than they were a year ago. So, in spite of rockets flying, drones flying, price barrel of oil, every time you turn on the news, something's happening, there's still 5% more properties pending in May this year than there were last year. That's resilience, and that's a
Yep.
positive thing for our industry. But let me get these charts up here, Jim. So
Yeah.
on Housing Wire, it's talking about how the housing market survived the Iran conflict. One thing that's kind of become an insurance policy to our housing market has been the mortgage spreads. So 2 years ago, the mortgage spread was really large. And a year ago, they kind of came back down to normal spreads. What that means is that the gap between the 10-year treasury and the mortgage rates it has a historic norm. It's usually about 2% from the 10-year treasury to a mortgage rate. Well, it got really fat 2 years ago, and it's come back down to be about 2%. That actually created a little bit of an insurance policy that kind of kept our market going. That's one factor. The second factor is if you look at total pending home sales, most of 2026, we've been tracking ahead of the previous 2 years. Look what's happened over the last 3 months. We are way ahead of what we were over the previous 2 years in the US. So my suspicion is this line is going to stay way ahead through the second half of the year, which just goes to the fact that we're going to sell more houses this year than we did the previous 2 years. And that in by of itself is a big win. I mean, we had good years in 24, 25, but we're going to have a better year in 2026, as should all of you.
Yeah, it just goes to what you said a second ago is you can make a business in any market. You just need to kind of follow the breadcrumbs of what other successful people are doing. And that means as we have different agents that are having success in a meeting or doing a mastermind, conducting a mastermind, is be a part of that and be there to soak it in, learn, ask questions, and then go and do it in your own business.
Yeah. You know, if you go down here to mortgage purchase applications, we're still ahead of last year's mortgage purchase application, which is the biggest leading indicator we can find that says how the consumer's moving in the market. I think we'll stay ahead for most of 2026. I don't know what happened last year in July, but this is a big spike for mortgage purchase applications. Maybe that's when the rate changed or something. But I mean, outside of 1, 2 weeks in 2026, we've had more people applying for mortgages than the previous year.
Yeah,
Big
there's been
numbers.
such a pent up demand on that, and I think it's just a matter of time that I think we started seeing it in May, and it's kind of trickling through the summer, but there's still a lot of pent up demand out there.
So the black line's pending home sales, just single family, not all home sales. I am noticing a softening at the end of this line right here. So I do think we're hitting a 30-day soften period, a 30-day lull that I think will kick back up, but I think it's worthy of noticing. And I guess my question on the call, those out there in the trench, have you felt it slow down just ever so slightly in the last 30 days? Or are you feeling it still hot? I'm overwhelmed with the feedback here, Jim.
For me, it's steady.
Steady, Brandon?
I'm actually seeing more activity this month than I was last month.
That's good. That's good. Anybody else?
The opposite. I think it's slower.
Okay, Jen, are you saying slower in terms of phone calls, activity on listings? What are you feeling slow around?
Slower number of showings on listings and under contracts.
Okay.
Both are a little bit slower. It's not dead in the water, but it is slower.
That's what I'm seeing on the numbers. Like it didn't fall off a cliff, but I feel like there's a little lull, right? All right, I'm gonna move forward. So Jim, there's an article on Market Watch says going back to the office may actually be better for you than working from home. I like this article, but it kind of brought something up that I didn't think about. It says the share of fully remote workers declined to 11% in May, which is down from the peak at 18% in January 2022. I don't know why 11% seems low to me, but I would venture to say a bigger percentage of real estate agents try to work from home.
Yeah.
The second point's what kind of took me by the surprise. It said, working from home has its downsides. Fully remote workers report greater mental distress, as well as less work-life balance and fewer career opportunities. I don't know why I would think that working from home would create greater mental distress, but I guess it kind of does because you're isolated. You're in your own little bubble, you're isolation, and you're not having these kinds of conversations in the marketplace, right? It's talking about how hybrid work could be the sweet spot, offering the most mental health benefits while still keeping up productivity. We know being in the office and working from a professional environment is directly related to productivity. What I didn't know is the lack of that actually kind of has a mental distress attached to it. What do you think of this?
Yeah, no, we saw that in 2020 when April 2020 is as soon as we went into lockdown, how many stories have we heard since then of just the mental distress that people had because of that, that they're still dealing with because of that, because of the fallout. We weren't meant to be on an island. And I hear it all the time too, Brett, of, well, I just work better from home. No, it's not about that. It's about camaraderie. It's about note sharing, and it's about sometimes you just need a push, and being around other people that are doing business will create business for you too. And so it's a matter of don't hide from it, because I also know that there are times that you look around the house and you go, well, the laundry needs to get done. Well, I need to do this over here. You find other things to do, and it's too easy around the house. But the mental distress part is real. You are
Yeah.
meant to be around other people and have community.
I think it's interesting. I love our office environment. I believe it's a highly productive environment. And I just think people should take notice. Obviously, you're independent contractors, you make your own decisions. But I do think there's data that says working out of an office environment leads itself to better productivity. I'm gonna move forward. So Luke found this on Twitter, or I'm sorry, X over the weekend. Um, and it really kind of making me think. So it's talking about this owning a home in America has never been more expensive. The average annual cost of ownership surged 39% since 2019. Yada, yada, yada. You can read through this. The biggest change has been interest. But Jim, I started thinking about this. One is it only affects the people buying a house today. If I live in my house, my interest rate is locked. My principal payment is locked. So it's really only our customers buying a house that's drastically affected by this. Are property taxes higher today? Yeah, because the value of the house is higher today. Is the principal payment higher today? Yeah, they're paying more for the real estate today. Insurance has gone up, maintenance gone up, emergency repairs, of course. But I started thinking about this in a couple ways. One is it really only affects people buying a house today, which we understand. But two, it doesn't drastically affect the cash buyer. They're
Yeah.
not affected by the interest rate. So there's still a percentage of our buyer pool that's paying cash, one. So really, it's only the buyers that are getting mortgages that are drastically affected by this. I mean, everybody's affected, of course, but the drastic effect is the buyer with a mortgage. And I still believe that rate's going to come down in the future and it's going to minimize that effect. So I don't think it's going to take it back to where the gray bar is, but I think it'll pull this increase back to consistent with what the other increases are. What do you think of this?
Yeah, for it's the insurance, it's the heck utility bills, it's all those things that you just don't think about. And so when you said a cash buyer, it kind of made me think, well, yeah, because if you have that cash, you're probably planning out things, or you're more likely to be a planner. I think where people kind of get hit and have a little bit more of a sticker shock are the when you don't sit back and you think about, well, insurance today, and what could I be looking at in the future, and what are those utility bills going to be? There's a lot of things to take in effect that aren't just that principal and interest payment, because you're right. The interest, we can bet that it's going to change, and I bet it does for the better, and it just helps everybody else out. But it's all those other things that I think start where you start feeling the pinch.
Yep. All right, last article. So on Market Watch, it was talking about forget this sell America trade. So I had to research like what is this? Well, this is specifically talking about foreign money moving to the US. And apparently there was a pull your money out of the US theme for a period of time. And what this article is saying is it's not really happening. And there's an interesting chart down here. It's saying foreign investors poured $1.4 trillion into US assets already this year. Um, the US dollar remains stable. Factors like 200 years of stability, vast resources, large domestic market, blah, blah, blah. But there's this chart that shows the global market capitalization. The US has $81 trillion in the global markets. That's more than half of everybody else combined. And that just goes to show there's a lot of foreign money being put into our markets. Now, granted, part of this is stock market, but you better believe there's a lot of foreign money going into real estate,
Absolutely.
commercial properties, the whole 9 yards. And I don't know exact percentage in Dallas Fort Worth of our market that comes from foreign investors, but it's more than 10. And I think it's going to continue to grow over time. And it just goes to show most of the world puts their money in the US.
Yeah, because I think you can look at it and say it may not be great all the time, but it's got a good track record. And that's where
And
I
it's
think,
stable.
we keep talking about that 4% line, and that's because we have great data that shows over time that's what we do. And it just goes back to Gary saying, buy real estate and wait. If the rest of the world can see it, sometimes you're just too close to anything to kind of tell what you've got. And this is one of those times that we need to just kind of take a step back and realize, man, we have a great opportunity that is just right here in our backyard, whether you're buying a house for yourself or an investment.
Yep. Jim, $450,000 house in 24 years is 1.15 million. Just saying.
Buy real estate and wait. That does excite me if that happens. That's
What do you mean if that happens? I'm banking on it. Happy Monday. There's your industry update. We will see you next week. Don't party too hard over the weekend. This call still happens every Monday. Bye.
See you, Brett.